Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar at present is still struggling to shake off the bearish tones as the market briefly slipped under the 75 cents overnight and printed a low in New York at 74.92 before staging a minor recovery. At present, it's still questionable whether the market can actually still rally due to the fact is that the bears are still quite persistent in pushing the currency lower. However, with the divergence clearly in place, as well as the rise in MACD histogram, I do expect to see some further up tests into the next 12 to 24 hours, with the immediate target seen at 75.65. Later today, we do have the Australian 2018-2019 federal budget. It's not expected to make or give too much implication to the direction of the Australian dollar. However, from a technical point, I still believe the market can reach the 76 cent before turning around and looking more to the fact from the broader picture down to 73.75. We would first need to see this move up before the turnaround, which would give the trader a better opportunity to shorten the market around or above the 75.65 area with 76 capping. Overnight, the dollar index posted a fresh high of 92.80 and also pressures the euro. And as you can see, the market at this point is still not shaking off any kind of bearish threat. And with the downside still pressuring, could see the move towards the target at this stage of 119.05 to 118.75. It is viewed that since the break of 121.80, the neckline measured move comes in at 118 figure. From a technical point, the divergence is a little bit concerning. So those trading from a short side, just be on your guard that we don't get a rebound very, very soon. This would actually see a rise back towards the region of 120.40. But overall, the focus is still to the downside at present. Well, the dollar yen has slipped further, as you can see, and remains absent in the third consecutive day of any bull phase. With the pressure still looking to the downside, the immediate support comes in around 108.70, with 75 being the low. But I do expect to see towards the mid or the lower range of 108 to be a buy area. From a technical point, we could still see this today before the turnaround. My broader picture is still very much towards 110 to 111. At present, I'm still holding no view to the pound as it hovers above the 135 handle and recently posted a low last seen back in January of 134.85. This week we do have the Bank of England's rate decision, and although Mark Carney, the Governor of the Bank of England, has put dampeners on the fact that there's no rate hike for this month, an unexpected one could take place, and if so, could see a slight knee-jerk to the upside. But that being said, the statement will most probably be holding to a more dovish case. But as you can see here, the market is slowly clawing its way out of the oversold region. In my preferred view, is I'm looking for a bullish case, but I'm still struggling to find that. But I'm still a little bit cautious in coming out with any call, purely for the fact is that there is no direction until we get some kind of confirmation from the indicators, which is lacking. The bull trend still remains at 1,300. And at the moment, we're still locked in a 1,300 to 1,333 range. The broader picture, though, I like to give is underneath 1,300. It brings in a target, and do note this because there will be a lot of stops under there, to 1,255. But I don't feel the market will take the downside out. Overall, the picture is still pretty much bullish. Therefore, we could see further tests back towards the recent highs around 1,365. Above there will give implications towards 1,400 to 1,425, which is my preferred view. I'm not overly bearish on commodities, therefore opportunities should arise on the slight minor sell-offs. And talking of which, silver still looks towards the target of $16.55, and dips are still a way to go, and especially from the rejection from that $16.15 does support a further case to the upside to a region of 80 to 85. Wrap it up with oil. The market took a stab at $70 a barrel, but didn't progress further. At the moment, I'm not bullish, and I do expect to see a pullback to at least $66 a barrel. The market is a little bit on the jitter side due to the fact is that they're waiting for President Trump, who tweeted overnight that he will be announcing his decision on the Iran deal tomorrow at the White House at 2 p.m. New York time, or 1800 GMT time. So keep your eyes on that, because the market will be very jittery and could actually see very whipsaw price action. So do be aware of that. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday reports, and I hope you enjoy the day that's ahead.